To discuss the November 24 RTP, which has been released by ICAI. Just a quick summary about the RTP. Most of the questions are similar to the ones which are there in the study material past exam papers. There are some new questions, but again, if your concepts were clear, if you are thorough with your concepts, you would not find any difficulty in solving those particular questions. So without wasting much of the time, let us start with the RTP discussion. So if there is a repeat question, I'll not go into too much of detail. If it is a new question, I'll tell you where all you have to pay extra attention to, right? So let's start. The first one. Now, whenever you get a case-based MCQ, I've been telling this in the past as well, you have to look at the requirement of the question in the examination before you start analyzing the case. Okay, here the case is very small, but if you get a longer case study, what you have to do is quickly you have to see what is the requirement of the question. So here, the first question says, when and by what amount the revenue be recognized with respect to the sales made on 1st of October. So here, when should they recognize revenue? That is the first part. Then second, what will be the amount of finance income? So there is definitely a finance income, and because there is no zero option, there has to be a finance income. Then what is the amount of trade receivables, right? So keeping these three questions in mind, we'll go back and we'll see what is the case, and as we read the questions, we'll get the answers as well. Come on. On 1st of October of year 6, D Limited sold a product to a customer for rupees 1,21,000. Okay, this is the value at which it is sold. This amount is payable on 31st of December of 2008, that is year 8. Now, generally when you get this X6, X8, it's easier if you read them as 2006, 2008, so that calculation becomes easier. Sold on 1st October, money will be received on 31st December. So basically after 2 years and 3 months, the amount will be received. The manufacturing cost of the product is 80,000. The customer had a right to return the product for a full refund at any time up to and including 31st December. So till 31st December, customer has a right to refund, right? If customer has a right to return. Now, if the customer has a right to return, do we recognize sale immediately? We can recognize if we believe, or based on the past evidences, if you have reliable evidence which says that the customer is not likely to return, and accordingly we can record revenue, right? At 1st October, D Limited had no reliable evidence regarding the likelihood of the return of the product by the customer. So D Limited does not know whether the customer will return the product or not. Okay, when they do not know whether the customer will return the product or not, then can we recognize revenue? We cannot recognize revenue. Okay, the product was not returned by the customer before 31st December. So much of story, and now they're saying it was not returned, means the time period to return has expired, and on 31st of December you can book revenue. Okay, so right of return of the for the customer expired on both 1st October year 6 and 31st December of year 6. The cash selling price of the product was 1 lakh. A relevant annual rate for discounting is 10%. So they have said 31st December till 31st December the customer did not return, means the customer has accepted. So when will we book the sale? We will book the sale on 31st of December. So the first question, when? 1st October? No, not on 1st October, not on 1st October. On 31st of December. What amount? See, actually they should have been smarter to include one more option as 31st of December. By what amount? 1 lakh, straightforward, right? Second question, finance income to be recognized. Now, the cash price or the transaction price is 1 lakh. There is a financing component. See, the agreed price is 1,21,000. The cash price is 1 lakh, and this 21,000 indicates the financing component. Now, what is the amount of finance income to be recognized with respect to the sales in the year 6-7, means till 31st March of year 7? How much should be recognized? Now, when did we recognize the sale? We recognized the sale on 31st of December. When is the year ending? 31st March. How many months? 3 months. For 3 months at 5% on 1 lakh. So 1 lakh multiplied by 10%. The rate given is 10%. 1 lakh multiplied by 10% is 10,000. For 3 months, it becomes 2,500. Basically, divide by 12, multiplied by 3. So this is the correct answer. What will be the amount of trade receivable? This is a bonus question. What is the amount of trade receivable? You have 1 lakh, the sale value, plus so there's some issue with the pencil. Just a moment. So the amount of trade receivable 1 lakh, which is the sale value, and the 2,500 of interest, 1,02,500. That is the amount which should be recognized as trade receivable on 31st of March of year 7. Give me a minute and then we will continue. Okay. Then the next two questions are based on the second scenario. So what is the question? What will be the amount of revenue to be recognized in the year 5-6 with respect to the sales arrangement, and what will be the amount of revenue to be recognized in the year 6-7 with respect to the sales arrangement? So let us see that. What has happened? Again, this question is similar to the questions that we have solved in the class, which relates to the cumulative adjustment that we do. On 1st of July of year 5, 2005, D Limited began an arrangement to sell goods to a third party, B Limited. D Limited to B Limited. Price of the goods was set at 100 per unit. So this is the transaction price for all the sales in the 2-year period ending on 30th of June. So from 1st of July till 30th of June, 1st of July of year 5 till 30th of June of year 7, price fixed is 100. However, if sales of the product to B Limited exceed 60,000 units in the 2-year period ending 30th of June, then the selling price of all the units is retrospectively set at rupees 90 per item. So retrospectively, we have set it at 90 per item. So today the pencil is troubling. You may need to allow me another minute. Okay, so continuing, sales of goods to be limited in the 9-month period ending on 31st March of year 6. So be careful with the dates. We are starting in year 5 till 31st March of year 6, total 20,000 units. When is the discount applicable? Oh, sorry, it's not visible. So guys, I'm facing some issue in sharing the screen. So I'll end the live here. Sorry for that. I'll record it offline and then I'll upload it subsequently.